Welcome back to all my Meta platform investors. Yes, you've come to the right channel today as WhatsApp, Facebook, Instagram take over the world, and yes, Metaverse is coming. Yes, welcome to the channel, Barry Charles, your one-stop shop for everything finance. And today we're going to do a stock analysis on Meta platforms, aka Facebook, and at the end of this video, I will give you the intrinsic value of this company currently and where I can see the future price for Facebook right here, right now. Well, in this video, we're going to look at key metrics from including shares outstanding, EPS, PE ratio, revenue, and so much more, free cash flow. We're going to talk about it all here. Have everything in this video just for you as a Meta shareholder to understand if you should continue to buy the stock, if you should hold, if you should wait. None of this is financial advice. This is just a random guy on YouTube giving you some education to understand a bit about the Meta platform stock. So let's get to it. Remember to like and subscribe if you like the channel. Let's go. Yes, Meta platforms. This company is absolutely good company for shares outstanding. It's continued to go down. It's a stock that you can really be comfortable with looking at shares outstanding. They have been pretty solid with buybacks over the past, so you're pretty good with the shares outstanding. Now, earnings per share 13.3 at the moment. Can we see this continue to go up? We need it to go up for all Meta investors out there. It's still great to have that sort of growth, but can they continue? The PE ratio 22. I think this company's growing quicker than that. I reckon it might be more at a 30-40. That's where I see Facebook, even though people were saying the other way. It has no dividend. Come on, give us a dividend, Facebook. I think that might be coming maybe 10 years' time. But the revenue here, yes, the revenue is going to be around 130 billion for this year, from 70 billion. Say in 2019, so they are steadily growing. They're not absolutely flying off the shelves, but they're steadily growing their business. Net income, this has been all over the show. Been definitely all over the show with this one. But 26 billion is where it roughly going to be this time. So it's the net income is something that they need to continue to work on to build that up and get that going, because if you look at the revenue side, they're only at less than 10%, so that's something they're really going to have to work to get that net income up to be good for you shareholders out there. Total assets, yes, total assets of 206 billion compared to the total liabilities of 72 billion, so that's a very good sheet here. But this is where you start getting a little bit more excited. The free cash flow of $24 billion. Yes, $24 billion. And free cash flow, that is really outstanding. That's like about 17% of the revenue. That is what you want. But there's a big clause after that. They have gone into debt in 2023. This has been a silent killer. Now, people haven't actually really talked about this much, but $26 billion have just gone into debt. Before that, they were a zero debt company. Now they've got 26 billion. What are they doing with their 26 billion? They are doing something with the Metaverse for sure. Are they doing something else we're not known about? That's the question you've got to ask yourself. What are they doing with this long-term debt? They must be thinking something in the pipeline. The reels, are they pushing that side on Instagram? That sort of stuff. Are they really starting to push that sort of stuff? So I'm not sure what's happening there, but that's a lot of ka-ching from virtually no debt before then to go to 26 billion. It's like a 1,000% increase. That's a bit of a worry for you Meta shares. That's my only worry, but it's something you'd hope they're not going to continue to do. They're going to sell it off next couple of years. That's what you'd hope for, but we'll see, because it's high interest at the moment. So I'm not convinced that it's the smartest move, but I'm not sure what they're doing with their money. If they're doing something that's going to turn it into 100 billion, then, well, good on them. Yeah, so that's a little bit of a danger for you Meta fans out there. But Now let's have a look at this with Meta itself. What are the good things? What are the bad things? What's happening? Okay, first thing you got to realize with Meta, and there's a few other companies like this stock is always 99% of the time undervalued. This stock, for whatever reason, is always undervalued because some Wall Streets will not buy Facebook Meta at all, because obviously Mark Zuckerberg has done something to them in the past, and he will never buy the stock. This is a stock that people love to hate, and some lovers, they absolutely love it or they absolutely hate it. It's just one of those stocks for whatever reason. It is always undervalued. So when you're looking at undervalued the stock, you probably have to go to 20% margin of safety, 25% margin, because it's already going to be about 10% undervalued most of the time, if not even more than that. So that's just something you need to look at when you're looking to invest in a company like Meta. So let's have a look at the intrinsic value of this company. We're going to go with a $300 stock with the earnings per share at $13, with a 10% growth. Wow, here we go. This is the first $386. So right here, right now, you're looking at over 20% undervalued, as I said before, around 20% undervalued at the moment. And obviously way before then there was an absolute steal deal, but it's still 20%. Now if you believe it's going to go to 20% growth, then you're looking at over $650 stock. Now you're starting to talk about this. We look W value from here. Then obviously if they can get the earnings per share up, then $1,000 is not out of the question for you Meta fans out there. But where is their money going to come from? Where are they going to make their money? They got advertising clearly, but the metaverse has been one of their key drivers for a while. Can they get this profitability, because they've been losing a lot of money on it? Will they get rid of it completely? That's another question. I'm not sure, but that's been always a question. Are they going to find some new social media outlet or add something to the business that's going to make them continue to grow more and more money, which is something that Mark Zuckerberg has been good at doing acquisitions. At the moment, they're probably going to need a bit more money if they want to look at doing an acquisition, so they're going to have to find some money from somewhere. But definitely Meta at the moment is it's probably fair value on terms of where people tend to buy the stock at. It's always like 10 to 20% lower. But definitely if you're looking out to the future, this stock is just a buy all day, not financial advice. Do your own research before you invest in any stock. But Meta Platforms is definitely for a stock that's already up there in the top 10 stocks in the world. Absolutely is a bargain price even still now. You can get a decent return. You would easily double your money from here going forward. Whether you can afford the big share price compared to some other ones, it's a question for you to make at home. But Meta is definitely a stock that you can worth doing more research to see if you want to buy. Well, thank you. That's my intrinsic value on Meta Platforms. A little bit of a stock analysis for you. I hope you enjoyed. Remember to leave a like, a comment if you disagree or agree with my things on this video. And any advice is good advice for us here as we learn from Barry Charles, the Finance Channel, just for you. Have a great day out there.